DBGI stock making an immense recovery right into a zone that we were considering as a bullish reversal signal. Now let's go ahead and find out exactly what I mean in this video. What is up, you guys? Thank you so much for stopping by once again. This is ARCa coming at you with a DBGI technicals and raw price action thread of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. With that said, let's go ahead and dive right into the charts. Okay, so we are looking at DBGI on the daily chart and a daily time frame here, and we were actually writing this formation. It's called a descending broadening wedge, and this formation usually gives us a bullish outlook. We had momentarily failed the wedge, but we have since, over the last 2 days, recovered it. Now, funny thing is that we actually did notice that we were within a triangle formation here, or a falling wedge of sorts, in which the candle from today actually went to test right at that resistance level. Interesting. So it's a little difficult for traders like me to be able to see what's going to happen when we have no prior history at these levels. So in other words, we have gone into price discovery to the downside, and the reason why I'm saying this is because there is a potential to where we're forming what could potentially be a descending channel, and you can see that if we just make some adjustments to the lines, and here it is. So now this descending channel does have a range for us to look out for, and it looks like it is following the golden rule of three pretty accurately. Now, the golden rule of three is usually something I speak of often within this channel and within the community members as well on Discord. So it is the test of the resistance of the formation 1, 2, 3 times before a capitulation event in a true. It actually would realize a true breakout on its fourth test, is what I'm trying to say. So we are looking at 3, and there is the potential to where we can actually look for some support right over here from the SMA 10, which is the 10-day simple moving average. Now we can actually take some Fibonacci retracements as well to see what we have for the coming session. So let's just go ahead and take it from this right over here and see where we're sitting. So we are currently facing. Yeah, very nice. Okay, we're currently facing some resistance from the knot 618 at $5.30, and you can see that we're right below it here. So there is a potential to where raw price action may be suggesting a continuation to the downside, potentially testing our knot 382. $4.50, which just so happens to be very much in confluence with our SMA 10. Let's go ahead and pull up some EMAs as well to see what we have. This would be the 7-day and 30-day exponential moving average. So this 7-day it's the yellow line. So let's go ahead and just make it a little larger here, and you can see that this yellow line, which is right here, has direct confluence with our knot 382. Okay, so there is a potential to where we can come back and catch up with our moving averages before a continuation onto the upside, and potentially making a true breakout attempt on test number 4 of this formation itself. Now, the descending broadening wedge also is following the golden rule of 3 too. So we have test number 1, 2, and 3 followed by a large capitulation event or accumulation of sorts before us trying to actually make that attempt to a true breakout on test number 4. So it looks like we're still in the process of doing that. Now, another thing is that we can see that the bottom, the trend line down here, which can actually be adjusted to, let's see. Yeah, it can actually be adjusted to right, yeah, just like this. So we have this test here and this test here. We can actually see that the 382, I'm sorry, the knot 236 is a bit lower than the SMA 10 and the EMA 7, but the knot 236 does have confluence with our support bottom from the broadening descending wedge. So there is a potential to where we can actually come and test this as a wick down before a recovery, right? Okay, so let's go ahead and move on to the next chart. So DBGI, let's see. Okay, I want to be able to No, I don't want to show you this chart because this is a little bit of a mess. I'm actually creating just to mention to you in short. Sometimes when we print, this was mainly why I wanted to show you this. It's just when we print an inverted hammer at the top of a trend, and we're on a 4-hour chart, so it's a short-term time frame. So there is a we can apply some credit to this, but if we printed these more on a daily or an 8-hour or a 12-hour chart, then they would, really count. But it is a 4-hour, so it's okay. This is an inverted hammer at the top of a trend, which usually presents a bearish outcome. Okay, so this is very much in accordance to what we're speaking of within this chart as well. So we're looking at a potential downside test to the 382, maybe a wick down to the 236 at $4. Okay, so that's primarily just why I wanted to show you. But it's candle analysis. I don't always jump into candle analysis, but sometimes when it's presented well, then we can call it. But let's go ahead and get a bias in or for direction within the RSI's time frames here. So let's go. For the new viewers, I actually made you a diagram here for you to be able to see just what I am talking about. So 1, 2, 3, 4 zones of the RSI. Here they are for you to be able to tag along as I speak. So we are getting almost a neutral bias for direction on the 30-minute immediate short-term time frame here. Both the moving average, which is represented by this pink line, and the signal line, which is the purple line, are just straight ahead. The good thing is that we're at the border of both the bull weakness percentile and the bull strength percentile. So there is the likelihood to where we can actually be gravitated to either of these, in which case would still be in a sense bullish. Now the bi-hourly is suggesting a downside, and it is approaching the shallow areas of the bull strength percentile. So this is, if it gets a little closer, then it is likely for us to come right back down into the bull weakness before facing a correction to the upside. And the moving average is suggesting a continuation onto the upside, which is now these two time frames are in accordance of what we're speaking of regarding this chart here, where we can come down first. So we are being suggested some downside from the bi-hourly. Now the 6-hour is in the middle of the bull weakness percentile, and it is slightly pitched to the downside, so we can actually see some very slight downside before a correction to the upside, which is also in accordance with our chart number 1. Now the daily is this is the bi-daily. Let's look at the daily chart. The daily chart is suggesting a continuation onto the upside. It has now moved into bear weakness percentile, and it has since made a cross, a bullish cross above the moving average. Now the pivot is pretty significant. I do like it. It is definitely it is definitely suggesting a good upside. Now the bi-daily is also suggesting upside. Now it has also made a cross above the moving average, and it has now reached the deep zones or the shallow areas of the bear strength percentile. So we are likely to be gravitated right into bear weakness, which is bullish. Okay, so yes, regarding these two upper time frames, the daily and the bi-daily with an upside suggestion, and the smaller time frames with a downside, does lead me to be able to say that we are likely to face a downside move, potentially to the $4.50 or $4 level at the 0236. So we do have a support range right between this area before a continuation onto the upside regarding the daily and the bi-daily. Okay, so please also keep in mind that we are getting some good news from the Fed, and now we do have a suggestion for us to be able to now have on the table a 50 basis point rate hike. So this is very bullish for the markets in general. Okay, so now that is going to do it for today's video. If you have any questions or concerns, please don't hesitate to reach out to me within the Discord membership. I'm sorry, the Discord members page, which is the ARCa trading community, and Twitter. The links will be in the description below. I'm not a financial advisor. Please take whatever I do say or iterate within these videos as a form of entertainment. I can't actually suggest for you to buy or sell any assets. Okay, do your own DD and we'll be fine. But with that said, you guys, I wish you a good night, and I will catch you at the bell on Friday for a short session. Adios.